got to cover Bitcoin today. I'm gonna hop straight into it because I think Bitcoin is about to actually break down below the support down here. So we're gonna talk about this. Remember, I'm not a financial advisor, none is financial advice, but look at what we've had overnight being created here on Bitcoin. We've actually broken the support that we were at yesterday, and we were trying hard to not break down below this, but as you can see, very little volume here, and it just eventually ended up breaking down. And I always show the percent R trend exhaustion because the percent R trend exhaustion is a leading indicator for me, because when I see this blue line, which is the long-term trend trending downwards, that's very, very bearish. Now it has bounced up here, and mind you, this is the 1 hour chart, the hourly chart. We are seeing the short-term trend is breaking out, but it's at an overbought area and it's about to pull back. Whenever we see the short-term trend do that, it's typically because it's about to come all the way down like it did before so many times. Whenever the short-term trend does this, it always comes right back down. So the problem here is that we're going to end up seeing this pulling back, and we're going to end up seeing the long-term trend pulling back too. And yeah, we're going to see the price drop pretty significantly here. This is the hourly chart again, by the way. And when I say significantly, something similar to this, like from up here, down from 90K down to 87K, like something like that. And then you can see from 89, it can go even further down to like 85K. So that's pretty much what I'm watching out for. But I think this drop right here particularly could bring us down to 86.9. Let's just say 87K. Well, not 86K. So yeah, about 86K. That's about 2.7% inside of a pullback there. So even from there, like if we broke that support at that Fibonacci, we would probably almost immediately break that support, right? Like if it hit that support, it's probably not going to stay down here for a while. It's probably going to go down, immediately break that support, do something like this, and then continue down some type of double bottom situation. We know double bottoms are bullish patterns, so maybe this pullback could lead to some bullish momentum. So we got to be aware of that. So that's one of the things that we really have to pay attention to. So that's what I'm going to keep you guys updated on. And again, this is the hourly chart. We're inside of a rising wedge, which is a bearish sign. So it would make sense. It would definitely make sense that this thing goes down, right? So that's one of the things I'm looking at. When we come over here, we have the MACD. We see the buying pressure is actually slowing down, switching to some selling pressure here. So we should start seeing that selling pressure coming in pretty soon. And I want to see if we actually do a double bottom, because that'd be pretty nice to see. But anyways, we're also pulling back and doing the same thing on the 2 hour chart. The short-term trend broke out, long-term trend kind of got rejected, pulling back down. Let's see how far this does pull back down as well. So, only time can tell with that. So it is what it is there. It looks like some selling pressure coming in. We had buying pressure. The lightly shaded area just represents selling coming in, just kind of like how we see here, how it switches to selling, and vice versa when the selling switches to the buying. So that is what we can see there. And then coming here to our 4 hour chart on Bitcoin, we see that the percent R trend exhaustion is working its way down. This is something I was talking about yesterday in yesterday's video. The long-term trend here on the 4 hour chart is literally working its way down. It's going to keep working its way down. You're going to keep seeing these little jumps upwards, but eventually it's working its way down to an oversold area. So I wouldn't be too surprised if we've seen this continuing to come downwards here. Now, when it comes to MACD, it's just on and off, buying and selling pressure, on and off, on and off. So that's kind of weird, but we're not seeing the buying pressure to match the selling pressure, right? The selling pressure is more prominent inside of that instance there. And then we have the daily chart for Bitcoin, which shows the percent R trend exhaustion with the long-term trend being the blue line. Currently trending downwards, sideways a little bit, and the short-term trend has broken out, but now it's coming back down. So I'm expecting this to eventually get down here. Now, could it stop halfway down? Let's say, let's go back over there. Actually, I just now messed it up, but let's say it comes halfway down here on the short-term trend. Could it do that and then continue upwards? Yes. But if the long-term trend doesn't follow, it'll continue downwards. So that is the most important thing, the long-term trend on the percent R trend exhaustion. And then when we come over here on the MACD for the daily chart, we see a lot of buying pressure, and it does look like that buying pressure is once again kind of switching over to selling pressure here. You can even see it here. It does look like it's about to have a reversal right there, but the selling pressure might not be that big. And what I mean by that is it might be a double bottom, like I've been talking about. Because if it is a double bottom, then what it'll look like is the percent arc trend exhaustion, pulling back down here, and then boom, continuing on an uptrend with both the short and long term trend going up at the same time. And that would be bullish because, again, a double bottom is a bullish pattern. So there is a small possibility that we could be building up something bullish here, but first we got to get through the bearishness to actually get to it. And if we break below 80K, we are not doing a double bottom. If we break below 80K, I'm not looking at this from a bullish perspective, and we won't be doing a double bottom. But also, I believe if we go below 74K, now the bull market is officially over. Everything is officially done. We're officially in the bear market, right? I think we're in the bear market now, but that's besides the point. But I think if we go below 74K, it is official. And then vice versa. I've been saying this in all my videos, but I'm going to keep saying it so you guys keep having this refreshed in your mind. I believe if we go above 109K, then we are bullish, because then we are above the previous highs of that last rally at the end of 2024 and beginning of 2025. So if we get above those highs, above 109K, then that's when I think that we're bullish. If we go below the lows of that previous one and the highs of the previous rally, which was 74K, then we are officially bearish. If we go below these levels here, we do not want to see that. All right. So yeah, that's pretty much what I got for you guys today. Oh yeah, and the weekly chart. I guess this is probably one of the most important charts actually. So let me not. This is one of the most important time frames. But let me go ahead and show you guys this. So what we're looking at here with the percent arc trend exhaustion is both the long-term and short-term trend have went past this structure here. So unless it just randomly curves right now and it starts going back up, we're in for a treat. And even if it does, it might do this and then continue downwards. Because remember, we were talking about how we could have a double bottom. But look, even if we have a double bottom situation, right? Wait, let me go back. So look, even if we have this a double bottom situation where we pull back here and then we continue to break out, we can still get rejected at 109K. And then that's actually a possibility. I think that might be what's happening. It's a possibility, right? I don't know if it's going to happen or not. No one does. It's a possibility though. So if something like that happens and we do a double bottom, hit 80K, recover from there, go all the way up to 109K, get rejected at 109K, and then start creating that downtrend back down to those low levels, that's bear market territory. So we may even have a breakout and still get rejected at 109. So I want you guys to remember 109K. Look at the previous rally here. At the end of 2024, the beginning of 2025, 109K. If we don't break past 109K, bull market is completely over. All right. Completely over. It's finished. Finito. Nothing. All right. So that's what we got to pay attention to. Also, the weekly chart, it does look like some selling or some buying pressure could come in here, but that's a lot of selling pressure. The selling pressure could easily continue from here. You could easily start seeing more dark red candlesticks here, building up bigger candlesticks and more selling pressure. It could easily happen like that. Like we see this type of stuff all the time. So don't think that it can't continue to sell off, because it can. Like we could start seeing this lightly red shaded candlesticks because we start having the double bottom and then the recovery to 109K, right? And then right before it starts to get to the buying pressure here, maybe we see one green or candlestick, maybe two, and then we start seeing the red candlesticks coming back. Then we start seeing the selling coming back, right? And then the rest of 2026 may be bearish. And I've been saying this actually a lot. I said this a lot previously before we actually had the crash in Bitcoin. I know it's hard to believe, but yes, I've been saying that pretty much my prediction was this bearish expanding triangle here. As you can see here, this is a bearish signal. It's called a bearish expanding triangle. We were going through it, and I was saying that the end of the bearish expanding triangle just so happens to be at the Fibonacci at 157K. And that just so also happens to be at the end of February, in the beginning of March. And I was saying how I thought that the actual bull market would end by the end of February and beginning of March of next year. So if we actually break past 109K, that still stands. It still stands. So if we still go up here, I believe we would stop at like 157K by like the end of February, beginning of March. If we were to do that, that's a big if. But we have to get past 109K. If 109K doesn't happen, we don't get up to 157K. All right. So that's pretty much all I got for you guys today. Let me know what you guys think about this. We can go ahead and look at this before I close this out. Fear greed index at 24. So, still fearful, but it is what it is. But yeah, this is all I got, guys. Hit the like button, subscribe, all the good stuff. Remember, I'm not a financial advisor. None of this is financial advice. As always, I'll be back with another video.